Good morning, everyone. Well, that worked out like perfect today. Like some days the music ends just as the timer ends. Some days it doesn't. Today it just happened to do that. Um, yeah, so welcome back. It is now Wednesday. I can't believe we're halfway through. It's this end of August is always kind of funky for me because with vacations and all the boys lacrosse stuff, it's kind of like, man, it's nuts. Um, oh, hold on one sec. My wife is much as me. We just had like 5 minutes ago. It was fine. I had the dog out. Now it's literally like a huge downpour. So if you guys hear, I don't know if you'll hear it or not with the noise canceling, but man, she's like, "Is the dog still outside?" I was like, "No, I don't think so." Let me message her real quick. One sec, guys. Um, Otherwise she's gonna be like running around the house and the baby wake up. Uh, One sec. Let me know if you guys can hear me okay as well, as I'm just trying to type this out real quick. Um, all right, there we go. All right. So last 24 hours. Not as much movement today. So yesterday, when we were looking at this, we saw, by midday, the pound dollar and even the pound yen they were just taking off, right? They were just flying. And again, kind of made sense, right? Now today, things are a little bit more, I guess, a little slower. And there's one reason why. If you guys look at 2 o'clock today, you are able to see that we have FOMC notes. Now, this is pretty common. Right. Whenever we see FOMC, it used to be years ago, you'd see FOMC and it was like the hidden release. Nobody really knew what it was. And in recent, I'd probably say the last year or whatever, the markets have really kind of respected FOMC, realizing that how much, basically how much, I don't know, I guess how much control FOMC actually has. Right. So it's one of those things that it's no longer hidden and the market knows. So you got to respect it a little bit more. Right. So kind of what I see and what we've kind of seen throughout this past year, really, on FOMC days when there's been a lot of kind of indecision, like when the market's rolling and nobody has any questions about what's going to happen, FOMC hasn't been a big a deal. Now, today, you got to kind of ask yourself, is it going to be a good day? Is it going to be a bad day? What are they going to say? Is there going to be inflation? What is there, right? What's going to happen? So because there's indecision around it, we tend to have markets that stagnate a little bit, right? So, I mean, in the last 24 hours, we were up like 125 over here in 24 hours. Now we're only up 37, right? I mean, that's a big change from what we had. Well, what happened? Well, it pulled back, right? I mean, it pulled back in a zone that we mentioned yesterday during chart school, but things are not as crazy as they were. And this is going, kind of goes back to what I talk about. Like, are we in a trader's market or are we in an investor's market? Or are we in a day trader's market or a swing trader's market? This is one of those things that people fail to adapt to. So today, I'm not expecting a whole lot of movement early morning. And we may have some. Again, it's going to have to position and jockey itself. And, you will see some primary data come in probably from some different states. I know a friend of mine posted today that I guess Florida had their primaries. A guy he was working with ended up making it through. So again, you're going to see probably more. If there's any movement, you're going to see something over here. It's going to be kind of more media based. But what's going to happen is all eyes are going to be focused on the meeting notes. Okay, things that, and again, you can see these meeting notes. They will be released. You're going to be able to look at kind of, and here's the big catchphrases. Okay. Them talking about what the recovery looks like, how far we are into the recovery, or like how soon they expect before the market crashes, or measures that they're taking to prevent a even bigger crash. The FOMC doesn't mind if the market does have, pullbacks. Again, that's part of the healthy kind of economic cycle that you have booms and then, pulls back and booms and pulls back. It's healthy, right? With everything going with the global pandemic, it makes sense. The biggest things that we need to watch out for is kind of what does it look like? Are they focused on the inflationary numbers? Because again, that's going to be what jacks gold around. Also, what type of backstopping that they are going to do? Because if they're going to start backstopping people, or at least companies, they can take risks, right? If companies can take risks, that can lead to some big profits, or again, not necessarily failures because they're backstopped. All right. It's things like that we'll see inside of the FOMC meeting notes today, and that could really kind of set things off. So we are going to have some early morning movement, but then expect kind of just slowing throughout the day. If at noon, at lunchtime, you start seeing movement, it means that the market already knows what the FOMC note said. Somebody slipped. This report got read, and people are positioning themselves. So again, you do have to stay nimble today. But the most important thing, without a doubt, today is by that 150-ish time frame. Make sure your positions are protected if you're leaving them on. Okay. I typically will not trade through FOMC. I mean, if it's down in a zone or something like that at FOMC time today, I'm okay throwing a Nadex contract on because I know, again, whatever I get into that position for, it's the most I can lose, right? It's the most I can lose. It doesn't matter how far it goes against me. You can only lose what you put into it, right? It's not like spot currency or futures or anything like that. So today is one of those days where I definitely am more leaning towards, kind of Nadex type positions at the 2 o'clock hour. And again, could it do absolutely nothing? Sure, it absolutely could, right? But for the most part, it will tend to kind of, if they say something that is noteworthy, it's going to move. All right. Now, here's the kind of caveat to that. All right. I know not everybody that listens to this channel does watch Nadex, but here's what you got to watch out for Nadex. Nadex is also not a bunch of dummies. At least when it comes, or at least their market makers are not a bunch of dummies, right? They will also jack a ton of premium in these things. So we need to make sure that it does make sense on a premium based level, right? And this is just not necessarily Nadex. It's options across the board. If you're trading options, you have to understand what type of premium value, again, associated with volatility, is stacked into any type of option, but particularly with Nadex. Sometimes I think they go a little bit overboard because they don't have any clue and they're trying to take advantage of people that don't know what's going on. So that's kind of the caveat today. Now, the oil number should be pretty interesting. I don't have it up on my screen yet for oil, but I'll show it to you. We've been really bouncing back and forth, channeling and everything. And again, oil will, we have the oil inventory report, but with OPEC speaking today in meetings, they're probably going to be talking about, again, stabilizing the price of oil. Now, it has stabilized. It's been stuck in the same level for, at this point, almost a month, right? Within like a couple dollar range. It's, I would say, more moving sideways. It's definitely, there's been some intraday trading going on. I mean, we had a ton of trades bouncing off that 40, that 41 level. Even lower than that 40, what was it? The 40.26 level, I think. So again, oil could be pretty good, but remember, whatever happens with oil inventory report, if OPEC at the same time decides to steal their thunder, OPEC's speech, OPEC's message will probably overrule what happens with crude oil. So it's kind of a double whammy today on oil. Just got to be a bit careful about that. Now, does OPEC truly have the power that it used to? Can they really control the price of oil? The answer is no, not really. If they decide that, hey, we're going to do cuts across the board, everybody else can just say, okay, fine, we'll produce more. Go ahead, you guys take less profit. We'll just take it all. So they're in a very kind of precarious situation. But again, there is still a perception out there. Retail traders will see OPEC and be like, hey, OPEC, they got a lot of power, right? They control oil. And the answer is they don't anymore. We're seeing, solar going crazy. We're seeing, e-cars, everything else go nuts. So again, they're kind of in a strange situation. All right. As far as news, I mean, we're seeing like latest stories here. U.S. and China to double weekly flights, handling, lifeline to grounded carriers. Citigroup's find some stuff. CFTC adopts final cross-border swaps rules largely proposed. Yeah, nothing crazy. The war against the U.S. dollar is heating up. Yeah, that's kind of an opinion article. Consumer inflation, and here we go. Consumer price inflation in the UK. Again, that's kind of important. And again, that's that's based off of housing costs. Okay, but again, inflation going higher is something that they are looking for because again, inflation also typically is associated with kind of a recovering or strengthening economy. So that's not bad for them. 1.1% is fine there. I love this. Why the U.S. dollar's fall could turn into a rout if political disarray continues. Again, that's kind of not, again, opinion article on that one. Yeah. And this one here, it says dollar remains under pressure, but can U.S. politicians don't agree for physical support? Again, I would say kind of the same thing. And the reason this is kind of out and why there's like 3 articles all on the exact same thing is because of the battle of having a strong dollar or a weak dollar. And again, it also goes with associated with inflation. As gold goes up or down, the dollar tends to kind of, inverse as well. So a lot of opinion articles based off of that one. Will they be able to agree? And the answer is never. Until we get a third party, that's never happening. They just won't agree on anything. it doesn't matter. Sky's blue. No, it's turquoise, and they're gonna dig their heels in. I'm not gonna vote for it being blue, right? Is kind of what we deal with. So no, they will never agree. They will spin, twist, turn everything. But for the most part, again, it's pretty flat today. Looking at it tonight and tomorrow, you can see that there's really nothing in the overnight. No Aussie, no Australia news that's really considered noteworthy. Nothing with the euro or the pound as well. So. Which will mean it'll probably be a decent trading session in the morning for UK traders. Again, we'll have to figure out what the trend is in the morning, and it'll probably run until at least 8:30 tomorrow morning. Now, 8:30 tomorrow morning, we will be back on, obviously, but again, we have that non-farm number coming in. We have unemployment claim number, so it will be an interesting U.S. morning tomorrow, but again, we'll be back on before we get there. I do expect that tomorrow morning, these totals will probably have moved a bit more, particularly because everything is kind of pulled back and retraced and reset itself for FOMC. It will probably, and again, if it doesn't move after FOMC, UK opening tomorrow morning, we probably will see movement. Okay. All right. As far as the scanner goes today, so the scanner, it's funny. It's really playing flip-flop back and forth, right? Yesterday, what did we see? We saw, and again, I'm going to start from the right-hand side here. I feel like I keep going to the right, but the pound and the Aussie have just been like the two telltale signs of what we need to watch out for. But, the pound is, all red today. Right. Yesterday we saw everything, everything was blue minus the New Zealand. Right. And now everything is kind of swapped, at least in the last 4 hours since the UK opened today. So that's kind of an interesting kind of play on things. Right. Now, the Aussie, this is very interesting for me because the Aussie right now is in the last 4 hours basically down. I'm sorry, basically up, right? Everything is more or less trending. It's got pullback, so we know that it has kind of reached back a bit. Again, the Aussie is still very, very high in the curve, but gold, for the most part, it had a burst, it had a pop down and a retrace, but then kind of faltered again. It didn't go to those new high positions. So kind of interesting. It's, I expect that this in the near term is definitely going to be weaker. Mine is being drug up by gold, but I feel like this is going to start, I feel like, tracking with the pound more. Right. So interesting that it is an uptrend setup. But again, we know that we're sitting in levels of supply. So that uptrend setup is kind of one of those things where we're like, maybe not. Right. CAD basket, again, CAD is a little bit showing strength and weakness all at the same time against certain pairs. Against the biggies right here, you can see that, again, strength versus the pound, strength versus the euro, strength versus the dollar. Right. Those are all showing down. And up here, we can see Aussie CAD, again, uptrend setup, meaning we know it's pulling back, right? But it's kind of, actually, I guess it's confirmed at this point. And again, kind of strange. You're seeing this, which this is kind of strange, right? New Zealand CAD going higher. I mean, they've said we want the New Zealand currency to go down, right? We want it to go lower. And it's interesting that they're being fought against the CAD. Euro, totally a mixed bag. So yesterday we saw some euro strength coming back into the market. And, again, it wasn't bad to see that. But now we're seeing kind of mixed across the board. Again, weak versus the New Zealand, which is kind of funky in that one as well, versus the dollar, versus the Aussie, and versus the CAD. Okay. Strong versus the pound. But again, I don't think this is a euro strength story. I believe this is more of a pound weakness story. And then again, euro yen is basically more or less an indice market, and then flat for dollars or for the Swiss. So interesting. Interesting again. Power seems to be, again, switched back to the right side and weak. Now, the dollar is kind of all over the place, right? Aussie dollar is giving us one. The dollar Swiss is giving us an anchor break to the downside. And why could that potentially be? Well, I mean, look, U.S. and China are doubling flights. They're obviously getting long. I don't see, in the top things over here, I mean, I don't see anything, again, dethroning of King Dollar, it jumps. I mean, I don't see anything, right? Do you guys see anything over here? Again, here, Japan sees good trade surplus in July as exports to China recover. I'm not seeing any finger pointing, right? So again, am I surprised that the dollar Swiss is up? And the answer is no, right? It needs some political disarray for that one to continue to push to the downside. So I don't know, maybe we'll get a few days of kind of, peace in the trade war. And if so, again, that could give us some decent levels to start trading off of with the dollar Swiss versus the grinding that we're seeing to the downside. So interesting how things are, kind of setting up here, right? Very interesting. And again, I'm not, necessarily opposed to any of the price movement. All right. So with that said, let us jump over into charts. Again, a lot of this is retracing, but I want to make sure that we cover them all today. Oh, I have like a dry spot in my throat. It's killing me. It's like, woo. All right. Aussie dollar. So we're sitting here right now. Let's get our timer correct. Whoops. There we go. Timer's correct. So we were sitting, let's see. We were sitting right here yesterday. Okay. This time yesterday, we were up here. We're actually, we pushed up. It was that kind of 10 o'clock reversal. Actually, I guess it was here yesterday, right before the pop up. So we were sitting here. And again, we made another push into that level. And I think we marked this off actually. When I do the refresh, unfortunately, it pulls some off again. But we talked about that maybe being a top, and it ended up being a kind of a near term top in the market that gave us a push down, and it was only about 22 pips. The zone wasn't huge. It was later. It was late last night. A little bit of play in that one. Would we have thought it went all the way down? You would have liked to, but again, you had an area right here that was kind of a push up and pullback, and that's actually where it turned. So kind of worth an intraday kind of shorting position, but nothing super crazy. And the way that it hit, again, this is not actually the first hit of the zone. We know the zone was formed way back. And, it hit here, stabilized right below, and popped again. It's kind of like, next time this hits, it's not going to live. And it didn't. It popped and went a little bit higher. But it hasn't left the area. So we're still sitting in higher supply, right? And you can see here, being on the 4-hour, this is what we talked about, that we had this area up here at 72.47. And that's what we touched. We're kind of still there. We're sitting, and it's actually daily supply that we're in. So again, high on the curve. This one is probably not going to do too much. I don't see a lot of movement before FOMC. And again, talking about dollar strength, dollar weakness is really kind of where this one is playing. I would have to say, again, take FOMC meeting notes out of the equation. Being where we are high here, it has been unable. And again, all morning, what are we seeing, right? When you look at those news talking about, dethroning King Dollar, dollar going to weak, dollar, again, yeah, you're seeing it, but that's their reactionary news articles to this going higher. We're very, very high on the curve. If FOMC talks about, depending on, we're not seeing inflation is well under control, and they mention anything about recovery and, when they could be looking at anything that gives any type of strength or doesn't, actually, I guess it's not even strength, but anything that they say that is not bashing the dollar, right? That's not bashing the dollar, talking about how bad it is. That will bring dollar strength back into the market. If they talk about, hey, we don't see inflation becoming rampant right now, as we're entering this recovery, and it looks like it's going to be a healthy recovery. That's basically all saying we don't see inflation coming in. So again, gold is not necessarily something you need to watch out for. And that can also lead to dollar strength coming back down. So on a technical level, this is set up more for shorts than anything else. Again, there'll be intraday movement. What I'd like to see is I want to see how that first hour and a half goes from the open till, 10:30-ish. We may actually have a position here that we can take and be out before FOMC today. So again, high on the curve. I'm a bit more bearish on this one, looking for smaller, kind of levels inside of here. Right now, we're kind of still stuck in that same area. And again, because this is directly related to gold and FOMC is, the controller of monetary policy, again, just show a little bit more caution with this one today. But again, check this one out at 10:30, see how, again, in an hour and a half from now, kind of see where it's at. It may at that point have pushed lower, right? If it pushes back down into this level here, right, this may be an opportunity, again, to take this, if it retraces back again, and at 10 o'clock, we're at 72.37, that could give us a small little intraday long that will get us out probably by 1 o'clock. And again, we can maybe, get a long out of this one. And all that would be is this kind of early morning, oh my God, the dollar's weak, everybody sell it, right? That could push us down, and then we can continue on the same trend. So inside of this kind of sideways movement. Is it the best trade in there? Probably not. But again, this is the first chart. It is a level that we did have a push off of. The indicator did like it, so it did match right and left, and it did like it. I like this level better. I think the 72.114 is something that I'm almost kind of hoping we have that collapse, and I wouldn't mind if we were sitting down at that level for FOMC meeting notes. This is an example of if we're at that 72.14, 72.15 level, I am probably going to look into one of those binaries that may be a little bit farther out. Something that's pretty cheap, because again, if they talk about how we see a further weakening of the dollar and, no inflation, we need to print more money, that's going to make this go higher. And that could be a great taking off point. And you can see last time that price touched there, again, yesterday morning, it collapsed and immediately, boom, popped out again. So you have to respect 72.15 as a level where we're looking for longs, right? And again, coincide that with FOMC meeting notes. That's not a bad little place to take a trade. All right, so keep that on your radar for later today. Now, as you can see, this one, sideways movement. Now, we ended up taking that one trade over here, and again, it came back down again, got front run, and ended up tagging this level going lower. Now, we just hit it again in the overnight. Again, on an hourly basis, you can see on the 30-minute, that was the zone that we talked about, and again, hit, came through, went pretty deep, and pushed back down again. To me, this one also looks like, at least in the early morning, it looks like with this one wants to continue lower. But remember, this one is kind of wedged in, right? We've had this area up top, and this area has been hit quite a few times. We reestablished another level on Sunday on it. But for something like FOMC, I don't feel like this one is going to have the power to hold it. Now, Aussie yen and FOMC. This one is a bit different because, again, while the Aussie dollar is going to be directly related to any talk of inflation and gold, the Aussie yen is going to be a little bit more reactive to them talking about what economic recovery looks like and the overall indices. Okay. Yes, it does have the Aussie yen, so it is linked to gold, but for this one, it's going to be more yen based. Okay. It's going to be more yen based. Now, looking at this right here, again, on an hourly basis, we are still high in the curve. We just came off of a zone, so you could actually be in a short right now. It may pull up, and again, if it starts to turn here, again, I can see this coming back down into probably, again, it could definitely be down here into the 76 number. Now, I don't like this 76.30 for FOMC. Although price is kind of based in this level, the problem with this for me is it's in the middle, right? We know that top side here, we've had sellers that keep stepping in. We know down here, and again, this is a clean level down here at 76 flat, and that's what we've been talking about for the last couple of days, right? Right at that level. I kind of need this one to be an extreme up or down before I'd be willing to kind of take this either direction. All right. So of the two, again, I do feel that this is also in kind of set up for a technical short right now. We'll see how this one kind of rolls over and if it's going to continue. And again, it looks like it's running into sellers right now. And again, probably a push back down, but this middle level right here is not necessarily a level that I'm looking to take for FOMC. Okay. High, low, either one works. In fact, you can see on the 30-minute, we actually have a fresher level up here at 76.75. So looks like in that 75 pip range is probably what would be best, right? That's a 30-minute level. Here's an hourly level down here. So again, if we're able to manage a punch through, I have no problems with that. Again, we've hit this level 1, 2. I mean, big spikes in, 1, 2, which is actually more, and then this would be 3, and this would become number 4. So I don't know that this level really has much left in it. If it does, again, I'd be surprised because we've taken a couple different smaller shorts as we've reestablished it, but 76.75 is definitely a cleaner level. All right. Now, euro yen. Euro yen. So yesterday we talked about bouncing off of this level, and we've more or less stabilized. I don't have euro yen up on the scanner, but you can see, I mean, we're sitting on an hourly basis. I'll stretch this out. So we're sitting here right now. And yesterday we were sitting right here. So again, not much difference. We had just come off that level. We kind of hit it again, but we're pretty much right there, right? We're pretty much right there. So we do have this area of interest level that we'd marked off, and you can see what did it do? Not only did it bounce off of it, right, but then it became a stabilization point. So it's an area that we're kind of looking for. Again, this is going to be more of a yen play more than anything else. But I would say, if anything, this is basically just sideways movement. And it's in the middle, right? It's in the middle. I mean, honestly, for me, 125 is an area and then this 126, level up here at 126.35. I think both of those two are great areas. Again, this was a retested level up top, and this was a nice push off. But we're kind of consolidating into the middle here. We really need movement up or down. So I think the way to play euro yen today would be to show a bit more caution. I think it'd be, be patient. I think there's probably going to be better setups on other pairs than this one. And again, right now you can see that we're just bouncing off these lower levels. So yeah, I'd be focused on that. Now, I don't even know if I'd take that higher. I was going to say, we have this area of interest level if we can get any type of decent pullback in here, but it looks like it's more... We're not getting the clearance and we're not getting the pullbacks. Unfortunately, it's hitting profit targets in both directions. This one may have gotten us, but I don't know. This pair just doesn't have enough movement for me. So let me see. ATR is down to 92, but you can see we're basically flat over here. Yeah. I still want to remain short this one, but like I said, we're sitting in the middle of this kind of intraday range. I think anything, set your alerts again, 125 and then 126.36. I think are the two that you need to watch out for, top and bottom. All right. Now pound yen. Now pound yen. Again, you guys can see the collapse that this one had. Right. Yesterday we were talking about this thing went straight up. We were looking to get shorts on this at 140.30 or 130.03. It formed this new level, and that new level just hammered this thing back to the downside. So. We mentioned earlier in the week this 138.73. You can see we were right in that zone. That zone started here. We managed to maintain it, and again we took that. This is an example of that reversal bounce that we like, right? We hit the level, we come back up, and then we touch it again, and then bounce out of it. That is that confirmation entry. So where we are now with the pound yen, it's come down. It's grabbed the buyers here. It's starting to push back up. Right through this red line. I don't know. Again, we will probably retrace a lot of the losses that we had. It was a decent level that it bounced off of. It was inside of this larger 4-hour zone, and that's why we came up with the 140.03 because, inside of that 4-hour zone, we were trying to kind of lower our risk, and we had this double push up. Unfortunately, it turned on us before it got to that and kind of crashed back down again. So, this is a lot of movement in a very short amount of time, and it's basically been since the European Open. This is why opening of markets is so important. I mean, literally straight down since this UK market. Now, it has bounced off of a 4-hour zone. Again, we're kind of channeling back and forth here between these two. So this one's a little bit harder because I don't want to get into this and see a violent swing because of the yen later today. But I do feel like this one is going to move higher. I do feel like it's going to retrace. There's not a lot of pullbacks in this kind of decline this morning. And what have we seen? Huge push-ups, huge strength in one day, and then the day switches, and what do we have? It retraces all back again. So I don't like the levels in it for the most part, I guess is what I'm trying to say. I don't see anything holding this back. So if I had to make an opinion, I would say that this one is probably going to go higher today. Again, that would be more or less pound retracing, not so much the yen strength, but at 2 o'clock, this one definitely can take a kind of a funky, kind of a wonky bounce, again, based off of the yen. And if you see where it's turning at big levels. I mean, this is definitely a level here, guys, right? Look at the way that the wicks formed there. And actually, I guess that was more of a retest of kind of this level, right? From originally. And it's hard because here was the original, but it was retested, and you guys can see coming off. It is a touch there and a touch there, and it actually formed kind of a new level in this zone. So, no surprise why it bounced off of that level. But it's not one. Whoops, it's not kind of the cleanest area of where I'd be like, hey, listen, I love that for a long. But I do like the retrace. But even on the 30-minute, look at this. There's no pullbacks until we get all the way up top. Until here, this is the first real area where we have sellers stepping in. Now, with that being said, if we can rally up there, that could be a 2 o'clock. It's about 36 pips. It definitely has the power to go past that, but that could be, that could even be a 10 o'clock reversal if we can move in the next 2 hours. It's going to take quite a bit of movement, but that could be one. Probably a minor level, but I wouldn't mess with this with FOMC. Okay. Now, pound dollar. So, pound dollar. We mentioned this zone yesterday, 132.52, and you can see that's exactly what we bounced off of. Okay, this was also high on the curve. It was a 4-hour level. We mentioned it yesterday. We said this is not a Harry Potter trade setup situation. We had a level down here. We said, listen, it doesn't matter what we do. We are not taking a Harry Potter because, again, we have a level that we're going to run into, right? So here's where we are right now. Yesterday for the presentation, we're sitting right here. Okay, and we said, even if we get the pullback, not interested, right? Not interested because, again, this is a 4-hour zone. We don't like to mess with 4-hour zones. And that's what happened. We hit, we dropped again, we hit it again, and now we've pulled all the way back from where we were. So it's technically up 21 from this time yesterday. Obviously, yesterday we were at noon, so it's a little tiny bit higher. But right now, it's important to see what we do from here, okay? Are we going to stabilize on this old level? And there's a few levels that we could draw. Again, this was drawn off of the 4-hour, but again, there's a minor zone sitting right in here that it could bounce off of. It's hitting this wick over wick right now. What I'd like to see, again, we have on the smaller time frame, we now have kind of tops and bottoms that we could draw minor levels in, right? We definitely could draw minor levels up top. We could definitely draw them on bottom. I mean, again, this is that zone. I'll move it and we'll kind of really refine it down and say, hey, listen, this is where we've kind of seen sellers step in, right? That's a viable level. Looking on the downside, it's not as clean to the downside of where the bottom is. There is a bit of a retest right here. So I don't love this one as much on the 30. It's this pullback here, but it's not really the best. I don't think we can hit anyone to the downside. I would have liked if there was a better zone here, but 30-minute wise, it's a minor level. There's a level sitting right in here. It's okay, but I would say at best it's like a B- type position, right? Just by the way that this formed, again, there's a small level here. It did give us a little bit of a pullback and chop, and it did retest it, but the formation of it is not necessarily the best of formations. So we're kind of in the middle of that zone. I think I do like the top side probably a bit better. It's not ideal. I would say that this is also at best a B+. And the reason why is because, again, we formed the level, we came up and pushed it to the very, very brink, and then the retest didn't just bounce here. The bounce pushed all the way up. Again, I do like how the wicks are coming to the downside and sloping and things like that. But I would have liked if the retest only came up to where this kind of first started and then pushed. So it's not ideal. Again, we're still sitting inside of that 4-hour zone. Big question what I want to see in the next hour is, do we stabilize here and then start to push lower? Is the pound weakness really going to continue to push through? And again, what will the dollar be able to kind of do once those traders come online? Again, I'm okay with the spacing, but if we start turning red and rolling, this one's going to be harder to grab a bottom. This is not a zone that I maybe if we hit it at 10 o'clock, but like I said, it's not my favorite of zones. It's one that we need to watch out for, but I don't know if it's an actionable zone that I would actually take a trade off of in this one. I still think watching this zone up top is what's most important. And again, if we continue, this green zone is an area that I'd be using more for a target more than anything else. Because if you are short from up top here, which again, you should have been, we talked about that yesterday, that would be a downside target for me. Because actually, I guess let me rephrase that. Downside target would need to be right about there where that blue level is, because that's where we saw basing and kind of an explosion through. And from that peak, that's about a 70 pip runner to the downside. Okay, Euro pound. So Euro pound, look at this bad boy. So we had this one marked off, and we talked about, hey, kind of tops and bottoms of where this one was going to roll back to. And we mentioned this 90 level yesterday, right? We said, hey, listen, we have a zone in here. If we can hit this 90, and again, that was on an hourly level, right? We talked about, being there. Well, look what it did. It came right down. So there's our 90, right? We are sitting here right now. We were sitting right here yesterday up top. And we said, if we bounce, go. And that's exactly what we had. We talked about this big push down being a kind of a parabolic retracement setup. We've now pushed all the way back to the top side. So, it hasn't changed too much. We're still sitting in this same level. Again, here's that level that we can draw from. I would have to say, again, this kind of goes with what we're seeing in the pound dollar. Got a little bit more movement. Again, we're looking for this to come back up into kind of this level here, right, on an hourly basis. At this point, again, I'd probably drop it up here up top, right? A little bit more push forward. We're not only hit our profit target in the other one, but give us a nice reversal area for here. So again, this was yesterday's big drop down. We bounced off that clean level. We rotated and pushed back up. So Euro pound is probably going to snag it a little bit more. That's what I expect to see. Again, we talked yesterday. This is not crazy fast movement until the open, right? So this was the European session yesterday, right? It kind of ground down in the UK after hours and gave us kind of this basing and hit, right? And then what happened when we got to the UK Open today? Boom, right back up again. So if we have sideways basing, tomorrow morning I could be looking for a short on this one, okay? As a kind of turn and flip. All right, so 90, basically 90-10 on the bottom side. Again, that's what we mentioned yesterday, the 90-10 level was the top side, and you guys can see where the zone was formed off of. And 90-46 on the top side. Let me see if we can refine that just a little bit. Yeah, let's refine that just a little bit. Put it up here at 90-50, and look for that as kind of like a reversal area. Let me see what the difference is there. You know what? It's only 14. Just take it off the 30-minute level. It's only 14 pips. All right, something along those lines. All right, euro dollar. So euro dollar will be in play today. So yeah, euro dollar is basically just sideways. This one has moved 9 pips in 24 hours, and it's not even like it retraced up and retraced back down again. We're sitting here right now, and we were sitting right here yesterday. So we're in the exact same spot. So we only got a little pop, little push, and then flatline. So yeah, euro dollar. So we still have a long sitting down here. You guys can see it. It's just a bit lower. It's a zone that is really kind of based above. It gave us that kind of Harry Potter trade yesterday. I do see a short in here. And again, I'll remove this right now just so we can take it off. But again, both profit targets have been hit at this point. It's a level up top that hasn't been retested. It is obviously having some problems with the buyers here. Okay. Ideally, and again, looking at this one a little bit higher of a time frame, this blue zone up top is, I mean, we're sitting inside a daily supply right now. Okay, so we mentioned that yesterday as well, that we were going to be inside a daily supply. It's at a really, really hard time with that daily supply. And right now, it hasn't given us kind of an attempt to push any higher. Zones, unfortunately, the 30 minutes are the best ones that we're going to have. Kind of what I would say, and I just don't have much confidence that this is going to move in time. But up top here, the 1957, I think, could be a valid area to take shorts off of. And at the same time, levels down here at 118.93. Again, nice movement off. That was that Harry Potter. It formed a new level. So again, we know that we have that area of interest down here at 1883. But we did form a level. The indicator actually based off its right and left looking. It liked it, right? So it's punched it higher. Either of those would be a great 10 o'clock reversal area. If anything right now, the way that this looks, it looks like, again, it does want to roll over and push lower. Is this an area down here, the 118.93, that I would use for a potential kind of burst off of FOMC notes? The answer is probably yes. Top side, I don't know if I'd take that as a short because it's only a small 30-minute level. It is inside of a daily zone, which, again, that is great. But again, FOMC has the power to kind of mess up a bunch of different levels. So again, this would be not a spot short. This would be a Nadex short, something a little bit farther out of the money. Because again, if this rallies back down, that's going to be, oh, dollar strong, because everybody's talking about how weak the dollar could be. If FOMC jumps in with all the news things and talking about how, weak dollar is what's going to lead to recovery, this one's going to pop. Okay, so, again, there's a level on top of a level. 118.93, 119.57 are both areas that, again, I would keep on my radar. All right. Now, dollar CAD. Yeah, so yesterday we talked about 131.35, and we did hit it a few hours ago, okay? And that is based off of a 4-hour level, okay? It's a small 4-hour level, so I mean, we can drop down to this lower time frame and we can kind of check it out, right? I'll bring this back up so you guys can see. We missed it by just a little bit. I do think this one will continue to grind lower. Obviously, the oil number at 1030 today will affect us a little bit. OPEC actually will have more of an influence on this than I think the crude oil inventories will today. And the reason why is because OPEC talks about, global demand and, overall kind of regulating and restricting. That tends to be good for the Canadian dollar because, again, it is oil-based. And even though we may not see as much of a move with U.S.-based oil, products, Canada does have a bit of a reaction to that one. And again, you can play that in the, that actually may even be more of a CAD yen play than a dollar CAD play, because again, the timing is going to matter. But for me on this one, again, I continue to see this one coming down and grinding a little bit lower. If FOMC mentions anything about commodities, I can also see this one popping higher. But again, 131.35 was our level to take this off of yesterday. If it continues to push lower, that's dollar weakness. And again, I can see that, going longer. Larger level, 4-hour levels, you can see we're starting to run into a few different things. And even on a daily level, you can see it's kind of the same thing. We've retraced all that kind of COVIDness back again, right? I mean, this is that COVIDness, right? That's what I'm going to call it from right now, COVIDness. But we've retraced it. We're fully back again. So again, we have levels that are starting to reset for this one to the top side. Like I said, this is more of a dollar play than anything else. CAD is just, they're kind of blah right now. We haven't seen much. They haven't been in the news. They don't have anything until tomorrow morning. And again, we have the non-farm numbers tomorrow, and they had a big number last time. They haven't given us here, I'll bring this over real quick. This is what we have tomorrow for the CAD, right? A big ADP number. And you can see these are some numbers that are, a bit interesting, right? I don't know what this is about the two previous. We're actually much, much higher. It's kind of funny, but yeah, I mean, they're saying it's going to be over a mil. That's what it was last time. So we'll see if the CAD is continuing to have those same problems. All right. Oops. Hold on. I'm trying to reset this back to the correct place, and it doesn't want to go. Here, bring it across. There we go. I don't need oil yet. All right. So dollar yen. So dollar yen took a nice little bounce just a little while ago. Dollar yen is going to be kind of a mover today with FOMC. And this is going to be purely based off the indices. We're still kind of middle of the range. And as you can see, we don't really have much in here. I mean, this is more or less flat today. This is where we were sitting yesterday. This is where we're sitting now. So a lot of kind of non-movement. It's down 7 pips in 24 hours. And not a lot of it is this kind of little kind of retrace back and forth again. So we do have larger levels. And again, on a 4-hour level basis, we do have levels much lower. And when I say much lower, they're about 80 pips. There's nothing in kind of a near-term range that I can see jumping in and kind of saving us, right? And that's kind of that's the one thing that kind of makes me a little bit concerned about this one. We are clear to jump lower. We do have a daily zone starting here, but the way this is formed, I really think that again, this 104.55 is probably the next area where there's a decent bounce able to come off of it. Really, I mean, looking at where we see kind of nice movement, I'm going to steal this level right here. I'm going to take that with us. We have the level here. And again, why am I picking this level? Basically, this large candle right here. Okay. Besides that, I mean, there's a small zone here, and sure, yeah, there's a little bit of a trade there. But for the most part, we're talking about being 65 pips away. I don't think this one is going to make 65 pips before FOMC. So kind of what I'm thinking on this one is, it's an hourly level too. I almost kind of don't want to mess with that one. Probably looking for a spike top or bottom. If we can get a spike up, there's a potential this when we're rollover for FOMC hit, and then again the after FOMC reaction, and vice versa. If for some reason FOMC is able to drive us down to 104.55, be looking for an after play. Get a confirmation, then it's going to stop and then bring it back up right to where we're at about now. It's probably the best we got with that one. I just don't see much more on this one on any of the time frames that screams to me that, hey, listen, that's a great spot. I think that's the only way to do it. I think this will be a post. It's just in the middle of the range right now, so there's just not enough meat in this one. Like I said, I still like this one to the downside. If anything today, I like to see this continue to push lower, look for targets. This is what I would do in the morning hours. Look for that. That would be my kind of intraday setup. But again, don't mess with this with FOMC. Okay, FOMC will wreck this. But if we can get a push below, again, before 10 o'clock era, look for this to push back down. And again, I like the 1 to 3, 1 to 5. Both are in good locations. But I think 104.42 is a target for today. I think we can get down there. Use a break, retest on that entry. Okay. I love your smart plan modes. Whoever make them available for trading view. John, I could. The biggest thing is a programmer. My current programmer that has them for me now, that has added some of the additional features in a supply and demand. I don't know that he knows how to program for the trading view. If he decided that he wanted to be able to kind of, learn code to do that, then yeah, it's put it this way. It's definitely something that I'm open to. Thus far, I just don't have a programmer that, feels comfortable, programming over there. But if I found somebody, I wouldn't be opposed to, again, using the same parameters that my current programmer for MT4 and MT5 uses. Because some of the additional things that he added in to kind of make the levels a little bit more accurate and screen things out a little bit more have really kind of made the levels even better. And it's something that I'd want to continue that stuff across. But I'm not opposed to it. I mean, so if you know a guy that likes the program, I'd be more than willing to talk to him and kind of see if, we could work together on there for TradingView. All right, dollar Swiss. So look at that, guys. I told you. Look at this. No news is good news, right? And we had that push back up. And we said we're either going to hit top or bottom, and that's what we ended up pushing back to. You guys can see we're at this top level right now. So, as far as anything actionable in this level, again, FOMC will obviously, of course, affect the dollar. But the lack of Chinese news, and again, we're going to start doubling flights back and forth. So obviously war's not coming. That is, again, what is leading this forward, right? It's not so much, again, how often do we see Swiss news, right? Like almost never. So again, this is more of a, this is more of a piece between, combatants, right? Right? We don't see poking back and forth. We see we're going to double flights. We're working together. Positiveness. again, haven't really seen anything geopolitical, so it's pushing higher. So again, we are in a level right now. You guys can see that there is a level of basing right here. We're pushing forward. We got a little bit up here as well, but none of these are really, really super clean levels. And again, you guys can see on an hourly basis, we marked off this level lower, and you can see exactly what it bounced off of. Right? Exactly. I mean, we can continue. And again, this is not me cherry picking data. Here's that. Here's the level we drew from yesterday on the 30-minute. Right? We talked about, is this the new bottom? And there you go. There's the top. There's the bottom. Here's your risk to reward. Right there. And you can see we're past it and almost at the 1 to 5. Okay. And again, the reason why this was a level is because, again, look at the clean base. It dropped, went sideways, and boom, nice pop out of it. Now, it rode along the top. It didn't give us the look. Looking to the top side, do we have one of these patterns? And the answer is not really, right? We don't really have a great one. This is probably this area right here, right? This is probably the next big push to the downside. But do I love it? Not really. It's okay, right? I mean, let me box this off. Let's see. I know it's the wrong color, but I'm going to try to drop it and see if we can refine it. Yeah, you see there's not really a big kind of clean turn. There's kind of this level of basing here that we went off of, so we'd probably have to use that. And I'm going to turn this one white as an area that, maybe if we can get a confirmation entry off of it, maybe, right? I mean, we pushed, we retested, we pushed down, and then we retested it here. So, maybe something there. This could be a 10 o'clock reversal trade setup, right? 90.83. Actually, you know what? Let me put that on the other side because price is gonna. I got to get better at putting these out so they maintain their position after prices move to them. Too many times they're getting written over. So 90.83 could be a morning entry in this one. And again, downside, we already know that this area was fine. I'm looking at maybe something like this, right, in the morning. Now, it's not a level, again, that I want to mess with FOMC. It's only a 30-minute level. It's not even the highest quality of levels. But again, it's been tested once. So yeah, 90.83, I think is, we're good there for the top side. Again, morning trade. Now, NQ. So how about that level of basing? Again, here's that hit that we talked about yesterday. And really, what did it do? Not much, right? We talked about how it could push higher. Again, we had that bounce coming through early morning, right? The 10 o'clock, like, holy crap, market's open, tank down. 10 o'clock hit that level that, again, was a Harry Potter trade set up on this side, right? And again, here was the first entry. It kind of rode. You're like, oh, I'm getting nervous. And then boom, profit target came, hit a second time, and then boom, profit target right away. So I mentioned yesterday, without any news, there's no reason why it shouldn't have pushed higher. And it did. It pushed higher. In the overnight, it's obviously having some problems, and now it's starting to kind of, it's starting to fall. Now, the problem with this one right now is we don't really have a great level that we can use to go even higher or push up higher. FOMC is absolutely, without a doubt, going to jack around with the indices today because a lot of what they talk about what they see, how bad, what does the economy look like, from their standpoint, what type of backing are they going to put into it? Now, remember, the economy and the stock market are two different things. They're not really talking about the stock market. They're talking about the economy. But many people, right? They feel that they're the same thing. When they hear economy, they think, oh, the stock market? They're not actually the same thing, right? The FOMC is not worried about the stock market crashing, going up and down. They're worried about the economy, okay? But talking about what it's going to look like, and we're going to see what the down draw looks like, and talking about how much they're going to have to stabilize it, basically saying they expect to see the economy continue to crash or the economy is bad is only a catalyst for people to start saying, oh, they said it was bad, holy crap, Because again, being the last person to buy this because we're going to all-time highs is a crappy situation to be in. So, it's high. There's no really great bounce levels until we get back into this level here. I mean, really, until we get back down to the 11,289 range, there's not much, right? This is grindy. This is sloppy. There's just really not much there. I mean, even on a 30-minute, is there, and again, I'll zoom in so we can get rid of a lot of this other stuff, is there a great kind of push away level up here? Answer is not really. I mean, there's an okay level here. It's all right basing, but do I love it? Is it really, really clean? Not really, right? So we don't even really have a great top. I mean, the only thing that we could use something along those lines there, and that's okay. but it's not my favorite. It spent a lot of time there. It hit here. There's no real major conviction to the downside, and it came up and really pushed it to the very, very brink. So I can't really say that, hey, listen, I love that for a short. It's just not there for me. Now, maybe, again, if we can get a push through, maybe they say something that's good and we get a spike up, right? And if we can clear that level and base a bit, maybe this could be a level that we bounce off of and use higher. Again, the same type of situation we had here with this yellow. Maybe, and again, I'll turn this into a yellow because it is a possibility. Maybe we take that and we use that as the new level higher, right? So I'm leaving this entry here on still because, again, we saw a great drop in and a great spike out. There are people here, but understand that this level here, this area of interest, could just as soon be the top for a bottom going lower. If we can get there at the right time. Now we have a decent amount of room to run there, but FOMC can absolutely jack this one completely around. So, intraday, if we can pull up to this level, yeah, maybe, but make sure again you are well protected. And then the after effects obviously is what's going to matter most. But if OMC today turns out to be just a blah, they don't give us any real information, I can absolutely, without a doubt, see price coming back down into the levels down here of 11,288 because they're going to have to talk about the effects of COVID one way or the other. And that whenever we start bringing up COVID, we do definitely have pullbacks in the market. All right. Now, looking at the S&P, again, what did we have? We had a drop back down to that level in the 30-minute and a spike up. But again, is there a massive explosion higher? No, not really. Not really, right? So we still have a level sitting in here. And again, it's based off of kind of this range right here that if price can roll over, again, we're still waiting for shorts to that downside. Has there been any true easy to read levels in here? No, not really. I mean, it whipped higher, whipped lower again, whipped a little bit higher, whipped a little bit lower again. So there's just a bunch of junk levels in this one. Even on the 30-minute, I don't really love much that I've seen in here. And this top is the same thing. It's kind of doing that slow rollover. Again, there's a few little tiny levels in here, right? A push down. Again, both times, buyers stepped in. They stepped in a little bit sooner, and they pushed down again, and buyers stepped in again and saved it. But these are limited buyers. There's not going to be a whole lot more. So, I mean, if anything today, if we don't see that positivity and the FOMC is like, you know what, COVID's not bad. We're not seeing too much. Again, I would be surprised to see price back down here at 33.73 today. Best trade setup, I think, would be a Harry Potter entry, shooting through the bottom side of this on the 30-minute, right? And again, I have this yellow area marked off, but this blue box is really the one that you'd be focusing on. It's the top of the red body back in this candle to the downside. All right. Now, remember, for this to go higher today, what is FOMC going to have to say? The effects of COVID were not as bad as what we thought they were, right? We're not seeing the negativity or, we're not seeing the negative market conditions that the recent data that we have seen has been better than expected, right? Or vice versa. Everything is bad, but don't worry. We're going to support every company. Nobody's going to go out of business, and we're going to create some amazing stimulus that everybody's going to love, right? That will obviously have the desired effect of, retail traders. It will definitely go higher. If they're going to be like, yep, it's an unlimited blank check. We'll give you whatever you need. We're going to soften this bad boy. We're going to print lots of money. We're going to stimulate everything. Yeah, so then obviously that will push it higher. And this 30-minute level is definitely not going to hold. All right. But if that's what they say, between NQ and S&P, I like the NQ much better. Right? I like the NQ much better for those two for longs. Now, the Dow, yeah. We even had some short, small time frame levels, and it was still unable to hit those. So if the FOMC notes today bring in like supreme negativity, this is the one that I'm most bearish on. Now, again, we do need to watch this 27,683. It is a level where, hey, we need to watch out for this one. Yeah. I mean, it's a level that's been respected. Again, twice it has collapsed into there and found immediate buyers. So it's definitely something we need to watch out for. We have these two kind of smaller time frame levels, but look at this. This sucker is just flat, right? Here's where we are right now, and from where we were yesterday, for the presentation, we were sitting right here. So we're at the exact same spot. From this time yesterday, which is right in here, we're at the same spot. Actually, I guess it's a little bit higher. It's just here. So we're a little bit down. But from where we talked yesterday, same exact spot. This is not having the same pop, right? S&P, pop, even though now it's rolling over. NQ from yesterday, again, a bit higher, right? Again, it's starting to roll over now, but again, we're still seeing upward movement. Dow, not so much. So I think we will have a little bit of resistance kind of step in there. I think we will have a hard time pushing to the downside. But if we get too negative, if the FOMC is that bad and we can break this 27,683, if they don't step in again, and remember, guys, one test here, this is kind of a test, this is another test, this will be yet another test of that level. Again, we got a lot of space here that this could overtake to the downside, right? A lot of space. Gold. Look at that. Gold. Look at all that amazing movement in gold. We just didn't have anything. So the same level that we talked about yesterday, we had hey, listen, we had this pop off. It ended up slamming there at 10 o'clock and punched out of it. You can see we not only hit it again, that same level, and hit the same 1 to 3. We're about to hit the same 1 to 3 again. Now, would I be taking it anymore after this? Probably not. And again, this last entry that we just hit about an hour ago, this is a pretty aggressive entry in. And actually, the profit target may have a little bit of problems based off this last level, but not a bad little, not a bad little play there, right? So again, this one level has been a takeoff point for here. Again, this is a Harry Potter, right? It came up, it broke a prior level, came back and retested, and boom, collapsed into it. Again, this was the trade, right? This was the really good trade. The collapse in at a 10 o'clock reversal, punched higher, but we left that area on, and you can see we hit it again, came up, tagged the 1 to 3, pushed back down again, and just hit again. But again, me personally, I wouldn't have. It doesn't mean people couldn't have, but I think at this point, I think it will have a little bit more of a problem going higher based off of this level. But, doesn't to say, in 30 minutes, they're not going to punch us just a bit higher because it's FOMC day. So again, level has been golden. Now, can we use this level for anything else? The answer is yes. I don't know if this is going to happen today. And the reason I say that is FOMC is definitely going to bring up inflation and gold prices and commodity pricing. I feel like if people hear that, that will be enough of a catalyst for people to say, inflation, gold, buy gold. They mention inflation. Even though I don't think they're going to say anything that is going to be totally earth-changing, on a technical level, this level is held so well, you do have to think about something along these lines. Now, like I said, I don't know, based off of what they're going to say, if that even has the slightest possibility today of kicking in. Because I just feel like they're going to be like, it's going to be like a shiny object. Gold, I just feel like everybody's going to be pulled for it. But I do feel that this is a valid technical trade setup to the downside based off of the fact that this level is held. But again, it's been held 1, 2, 3, and kind of now keeps getting dabbled in there. It's definitely an area that buyers of gold have liked. And when those buyers disappear, this will most likely turn and flip, like we've seen in so many other pairs so many times, into an area of sellers. So it's an area that I'm showing caution with, but I do think purely on a technical analysis based level that there is a short position in there. But most people don't have any idea what that actually means. I mean, the Fed's going to be doing all kinds of buying, trying to stabilize. Eventually, they're going to say, hey, listen, there needs to be a healthy pullback. We can't just buy recklessly with, abandon. They will have to eventually be like, hey, listen, we do have to let it fall. Remember, they're not trying to change the trajectory. They're trying to soften any down blow and provide a good environment for it to grow in a healthy manner, right? Because what happens when the market overheats? It's going too fast. What do? They try to slow it down. They raise interest rates to curb inflation and curb growth a little bit. So remember, their job is to temper in both directions. So they talk about bad. They'll do everything to temper, but their job is not to keep it from falling, right? And that's one thing a lot of people forget, right? So again, if this falls down, guys, this is definitely a play that I can see. But I feel like the second, if there is one mention of inflation, it doesn't matter if they say we don't see inflation. I feel like gold people are going to be like, it's going to 5,000. And they're just going to jack gold pricing today. All right. But remember, if they're unable to punch higher, there are levels above where we are, and then hourly, we do have a level sitting right in here. And again, this could be, there could be a short bounce off of, 2008. There could be another bounce up here off of 2053. Either of these levels are great levels. So, they say there's inflation and this thing goes poof, and spikes up $50 and everyone's like, hey, I made $1 million. I did gold. It's like, yeah, but it was demo mode, right? Look for a reversal, turn around, flip back down. Because again, if it's as bad as they say it's going to be, and they need to print more money, that's going to supposedly, oh my God, we're going to have inflation. we're going to go into a recession first, and we have very low inflationary. And again, are these gold traders going to want to sit there and hold gold for a year or 2 years until we have economic recovery? Until they see the inflation? Probably not so much. They're going to want to grab that quick spike. But again, all those people that supposedly, got in first, that knew that they were going to say that raised it up, all the retail traders that are saying, oh, gold's going higher, I'm buying it. They're buying it from people that just, made profit, that wanted to sell it. And then when they don't see inflation and they're like, hey, it's not moving, I'm getting nervous, starting to go back, oh, crap, I'm losing money, they're going to start trying to dump it as well, which will lead the price back down again. So that's kind of what I see where gold. Again, small intraday play. I'd like some of the shorts in this to the downside. Silver is just kind of going sideways. So again, this was the play that we saw yesterday. What did it do? It rallied all the way back down again. Same thing, guys. It's the same exact setup. There's your entry, and it just tagged its 1 to 3 target from yesterday. Okay, same level. Now, would I use that level again for an FOMC? No. Again, it's a very small level. It was made on a 30-minute. It's already withheld itself really 3 times at this point. Those buyers have stepped in. It could be the same exact play to the downside. Again, if we get that pushed out, and remember the rules of that Harry Potter trade. It is a break, retest, collapse, or a break, retest, boom, right? Got to see what it does. So, who knows? We're going to see what this does, but this is going to be the same thing. Inflation, squirrel, right? Is what it's how this is going to do. They're going to see that, and it's going to be like, a ferret on a shiny object. It's going to get drugged along with gold. But again, same kind of technical setup. If it breaks again, if it hits the level and bounces again, no harm, no foul. You didn't get in the trade, right? It's got to follow the rules. It's got to break, it's got to space, it's got to retest, and then collapse. Right? But I do think 2850 is a level that, there could be some, shorts coming into this one. On an hourly level, that 2850 is a level that sellers have stepped in pretty hard last time. But remember, even if it breaks above, there's 2 levels sitting right above. There's a 4-hour level sitting right here, right? There's a 4-hour level sitting right here at 2903. And we have this level up here on the hourly at 2942. So there's definitely a place where this can come down. No inflation. Did the Fed turn the printers off? No. So Struck, it's not that. So here's the thing. Inflation only exists when you have a good economy, right? When producers are like, hey, listen, we can sell this for more because everybody wants it. There's great demand. Well, going into wave 2 of COVID, and when demand doesn't exist and people are worried about a market crash, they can't charge more for things. Okay, so when the economy is going great and people have extra money to spend, you don't care if your bananas cost 75 cents because you got extra money, right? Well, when people don't have extra money, you can't charge more for goods because they're going to be like, you know what? I don't actually need those bananas, right? Going into a recession / maybe even depression with election changes, COVID wave 2, God knows if COVID's going to, the vaccines are going to be you need a bumper every year type situation. We don't know, right? There's a lot of uncertainty. When you have those things, and go back, if you look over the last kind of 6 major recessionary / depressionary timeframes, there's almost no inflation, and sometimes there's deflation during those time periods, okay? A lot of people automatically assume that, oh, you know what? Inflation hedge, gold. Gold is actually not does not have a great return on investment. What gold does is it maintains, not assures wealth, but it maintains its value. Okay, the same things you could buy 2,000 years ago with gold, based off of where gold has moved, you can buy the exact same things. Gold is not buying you more now than it could 2,000 years ago. Okay, but people think that it does. It's not. That's not what it's meant. It's meant to maintain the wealth that you have, and without inflationary kind of things, there's no driving factor. I'll tell you right now, if we go into a recession, goods are not going to cost twice as much as they did before. That's the exact opposite of how things work. Because remember, if you don't have enough money, it's kind of like, do I need the bread, the peanut butter, and these other 5 items? Maybe not. People get worried. Okay. Eventually, will you see inflation when the economy is healthy? Sure, eventually. But are you going to wait a year and a half? The answer is no. That's not how gold investments work. So that's why it's supposed to be a very small piece of your portfolio as a way to maintain wealth. Okay? It's kind of what bonds and things like that were meant to do before. But with interest rates as low as they are, bonds is not really the best place to be in right now either, because there's absolutely no return by putting your money there, right? So that's why we're seeing those things. All right, so let's go across to our favorite one, oil, because again, we do have some oil news today. So this is what we drew yesterday, and really oil hasn't done much. It went higher. It gave us another entry. We talked about this one kind of bouncing through. We were hoping that by today we were going to be able to get back down to this zone, and really we didn't do much. That's where we were yesterday, and literally gold has gone down a little bit, right? It pushed lower. We're down at 42.45. The ideal setup, the one that would give us the best chance of making some money on this one was getting this down to $42 before oil. We have an hour and a half. Can it jump that far in an hour and a half? I guess it could. But that much of a move this close to oil would typically lead me to believe that the data is already out. Someone already has the data and they know where price is going to be, that the move would already happen. Typically, what we see in a lot of these cases where these are great setups is we have a lot of movement in the European session, kind of getting itself positioned in the right area to kind of react to the news. Right now, they're kind of tight-lipped. Nothing's happening. So I think what happened is the oil markets are really focusing on, hey, listen, has OPEC said anything? What's going on with OPEC? And again, this is a minor level. Now, I will say this, looking, and let me bring this right across again, looking at crude oil, again, they've been off a lot for forecasts, right? Now, we've seen oil pretty much stabilize, right? I mean, this has been over the last 3 weeks, right? This is what we've dealt with in that time. I mean, oil has not really exploded. We had one pop here at the end of July, or I guess the very, very beginning of August, and that was kind of this big bump here, this 10 million. But since that time, what has oil done? I mean, we haven't been right in weeks. We've been huge, eating up that surplus, but we're not having this thing move too much. It stayed here. So what I'm kind of wondering today is whoops, I lost it again. Hold on. If this number finally gives us that red number, that holy crap, we have a bigger amount, what's this going to do? Because even with these huge negative amounts, right? Huge deficit, right? In the amount of oil that we had in our surplus. If that wasn't able to punch us up to $45, what's going to happen if all of a sudden we have a 6 million or a 5 million, or even what happens if this is instead of being negative, what happens if it's a positive 3 million, that we are off, the forecast was off by 6 million barrels? What could happen to oil, right? Will that give us enough of like, hey, listen, sellers have stepped in, this hasn't been able to go. Will we push much lower? And it's an interesting situation. Like I said, I think oil, OPEC is going to be closely watching this oil inventory report. Again, we do have some preliminary, data out already. It'll be interesting to see where it goes. And if we do get a drop, do we take it off of this level? Again, it was a very smaller level on like the hourly 30-minute. And again, not a bad level to bounce off of. I mean, this level is held up top, but it is in the middle of the range that we are watching. Obviously, this blue zone here, again, this has been a zone that it had a nice push in and a retest, and it hasn't touched it since. So, I mean, 41.25 is a level that, again, what do we have here? This was a bottom top. I mean, listen, it's been this top, and then all of a sudden when we punched through it, it was the bottom. Again, it was a stabilization point, stabilization, and retest when it finally broke through. Again, a bottom here, a top here, a bottom here. That's a level that you have to respect. 41.28 is a level that we got to watch out for. So, I mean, right now, again, I'm kind of looking of, this is kind of and I'll change the color of this one just so we can kind of keep track of it. But I'm thinking like there's a level there that we need to watch out for, and kind of here's the bottom side of the other side that we need to watch out for. Now, are both those guaranteed to hold? No, I mean, obviously not. This has been a bottom and then a top. So again, could it punch through? But I think either of those two levels are things that we need to watch out for, but for potential turns. This top level actually as well, although this is the upper end of the curve, I definitely feel like we are due to break through this one. It's been, this was a minor level here. We had a touch, and it's pushing it to the little brink. You guys can see these pieces up here. It's pushed us to the little brink up there of breaking. Next time, will it hold? I don't think that it will, but I think, again, that's the top side of the curve. You got to be thinking bearish in that top 33%, right? We got to be thinking bearish up there. But could it push higher? And I think it's definitely a valid area. And then again, 43.50 becomes the new top on this one, where sellers have stepped in last time. So, right now to me, this one looks like for the next hour and a half, it looks like it wants to try to push lower. Again, it's having a little bit of problems. Let's drop this down to a 30-minute real quick. Yeah, it's having a little bit of problems, but again, it has just pushed a little bit lower. Yeah. I mean, it's going. It's just not going as fast as we had hoped it was. We were hoping it would push all the way down before today's news. So, again, guys, keep that one on your radar. Like I said, today, unless it's a really, really big miss, it will be blunted because people will be like, well, wait a second, OPEC speaking, we got to focus on OPEC. So I think we need to be a little bit more careful. All right. All right, guys, we went a little bit late today, but again, there's a lot to talk about. FOMC is a big deal. So let's go ahead and I'm going to pull the drawing up. Remember, today's Pip Chips is for double. Instead of doing 25, it's going to be a 50 winner. The reason why is because I didn't get a chance to do it for yesterday's Nadex broadcast. So if you guys are in the channel, Pip Chips are basically the channel currency. By watching the channel, watching the broadcast, you accumulate them every 10 minutes. I think you get 1 or 2, depending on if you're a follower of the channel or not, or a subscriber. What you can use, and typically, I mean, again, I have some indicators up there, but for the most part, what people are doing is they use these for mentoring sessions. Mentoring session is you and me, one-on-one, talking about anything that you would like on a Zoom session, all right? So they're pretty easy to accumulate by watching it each morning. The schedule is 8 to 9, Mondays, Wednesdays, Thursdays, Fridays, 8 to 9. And then on Tuesdays, it's 12 to 1 p.m. Eastern Standard Time because of I do a broadcast for Nadex, and I double them up. All right. So anybody can get in. I'll give you guys about 1 more minute. All you got to do is exclamation point ticket. Even if you just logged in seconds ago, everybody gets 1 entry. So you're more than welcome to get in. And if you guys win, again, become a follower of the channel. Know when we're on, and we have a good time in here. Or we try to have as much, as best a time as we can. Ernest coming in strong. Ernest is like, there's 50 Pip Chips. I'm in. I figured he'd spend more today, actually. Debbie, how many's Debbie in for? Debbie's in for 3. She's like, I'm tired. And I don't know if you guys saw it. We got that crown yesterday. Which is pretty cool. So I think that's good. All right, I'm going to give you guys 15 more seconds. I'm going to close it down. I need to go refill my coffee. And you guys know how motivated I am by coffee. I love me some coffee. All right, we got 5 seconds. 4, 3, and you guys will actually hear because of the delay. 1, boom. There we go. Look at that. Dead on, man. Dead on. Oh, man, Wealth Builder, you just missed it. All right, so here we go, guys. I'm going to do the drawing real quick. Winner of today's drawing is... Ooh. Debbie slides in there with the 3. Stop in Ernest. Go, Debbie. And Debbie is actually, just so you guys know, I want you to check this out. So Debbie, right here, let's give her 50 Pip Chips for today, right? Because today was the special day, right? Debbie is creeping back up. Oh, she just 6 Pip Chips over Marina. Look at that. She just went over. And I would like to point this out. Debbie and Marina they've been winning so much. They have been using their Pip Chips for mentoring sessions. And both of them recently in the last month and a half have had mentoring sessions and had some good success. So again, use these Pip Chips up. Will keeps planning, but has to keep backing out on me. So Will's got a lot of Pip Chips, and he's redeemed his, but hasn't actually gotten his session in yet because of work and everything else. So can't wait to actually get this session with Will and see how we can make him a better trader. And Ernest is up there. I have a feeling if Ernest and I get on a mentoring session, it's going to be talking recipes for sous vide and barbecue. But, that I'll have to give him like an extra 2 hours because all right, tell me about this recipe, Ernest. Those wings, right? Where they start winning, the other will be next. Yeah, I know. I would have had that last one too. Wealth Builder, I don't doubt it. I'm a homeschool teacher for 2 more weeks. Oh, yeah. Will, we start ours, and I don't know, Will. I don't know if you got your stuff. I got what the boys are supposed to do. It's literally 6 hours a day, 3, and then an hour break for lunch, and then 3 hours that I have to watch them on their Google Chromebooks, doing lessons. So yeah, not exactly sure how I'm supposed to get any work done when I have 2 of them sitting here for 6 hours that I'm going to have to base. I don't know. Supposedly the teachers are going to be live and they're going to check attendance and everything else. My kids are going to be all over the place. Yeah, it's unbelievable. Yeah, mine have 2 breaks. Yeah, mine are 5th graders. If I had a chance, I would send them back. That's just me. I don't know. It's going to be interesting. I'm dreading. And then we don't start till September 8th. So I have a couple weeks more of sanity. So, all right, guys, with that said, I'm out of here. Again, watch that. Be very, very careful. Everybody that's on the channel, make sure you guys are careful. That FOMC is going to be a big deal today. Again, may come in completely flat, right? May come in completely flat. But again, you have to respect the FOMC meeting notes. And if you guys want to look at the release, you can click it here and you're able to get them, right? Again, just click on this source right here. When you click it, it'll immediately take you up and give you the most recent developments, and you'll be able to actually read it. Now, I recommend everybody read this. It's always nice to kind of read it. Some of it will be over your head, but that's okay. It's nice to start hearing the lingo, and you'll hear, you'll see what they're thinking about, whether they're hawkish or dovish. And again, it's always nice for you to get your own opinions and not just, read what the market says. But again, 2 p.m., make sure you can protect your profits. And with that said, guys, I'm out of here. I'll see you guys tomorrow morning at 8 a.m. Eastern time, and we'll get our pre-analysis in for the unemployment news tomorrow. So you guys take care. Have a great day. Bye-bye.